Hi everybody, this is the week of Tesla's S&P inclusion, and Friday the 18th is your last chance to buy shares of Tesla before this historic event. Monday the 21st will probably be the largest trading day in history. S&P 500 fund managers are going to be selling a little bit of everything they have to make room for the massive amounts of Tesla stock that they're going to have to buy. But even with Tesla's meteoric rise, the mainstream investment media is still very slow to come around to the Tesla story. And for the most part, they are still wrong about Tesla. And they are in disbelief of Tesla's $600+ billion market cap. So we're going to discuss what I think is going to happen and my opinion about what you should do. And we're going to talk about why Tesla stopped its Model S and X production. And this year, Elon Musk made $13 million an hour. Plus, we have to discuss why JP Morgan has lost its mind. So if you could please just take a second to hit that like button and we'll get started right now.
You can spend your money and keep it too.
Business Insider has reported that Tesla is reportedly shutting down Model S and X production for 18 days, forcing staff to take unplanned, unpaid time off. Oh, that mean Elon Musk. But then, as you read the article, you notice that that's not what happens at all. It turns out that this forced, unexpected, and unplanned vacation takes place on December 24th. That seems to be curiously close to some holiday. I'm trying to remember what it is. And as you read further into this story, it turns out that the forced time off actually turns out to be an 18-day vacation where you are not paid for only 5 of the days. So this article is written by Grace Dean. Come on, Grace, you can do better than this. Is this the kind of article that you dreamed about writing when you were in journalism school? I have seen a lot of conversation out there about how the suspension of Model S and X production is simply so that Tesla can reallocate its resources into producing the Model Y. But I don't think that's what's happening at all. I mean, just throwing more workers at an assembly line does not really speed it up. In fact, it might even slow it down. And the reason I think that they are suspending the production of the Model S and X line is so that they can improve the technology on the line. They're going to update the equipment so that they can be more efficient and produce vehicles at a faster rate and a cheaper price in the future. And the reason they are doing it now instead of January, when the production matters won't matter so much, is really just an act of kindness to their workers, so that their workers can enjoy their time off with their families during Christmas time and the New Year's. The other day, Goldman Sachs raised its price target to $780 a share. So to follow that move, JP Morgan raised their price target of Tesla from $80 to $90 a share. Before I deal with Ryan Brinkman's article, I have to disagree with Jim Cramer for just a little bit.
One stock that you do like is Tesla, and JP Morgan, yes, they had a price target of $90 on Tesla. For those watching, Tesla is currently trading around $641. Yeah. And analyst Ryan Brinkman has concerns, Jim, about the stock, saying that it is, and I quote, dramatically overvalued. So is this proof that Wall Street still doesn't understand?
The point of what I've been saying is the younger investor is not using any of these traditional metrics. What they know is what they see. A car made by a genius that everybody wants, that they could build millions of, and it still will be bought. And they don't understand why older people continue to try to say, listen, guys, where's the earnings? So the stock's expensive, all right? So the stock's expensive. What does that mean? It doesn't mean anything to them that the stock's expensive.
In this clip, Cramer makes it sound like these young retail investors don't really know what's going on. And these young investors are supposedly ignoring all traditional investing metrics. The only reason we buy Tesla at all is because, hey, we think Elon Musk is cool, and wow, that's an awesome looking car. Look, I don't want to be too hard on Jim Cramer. He is definitely one of the most bullish people at CNBC when it comes to Tesla stock. And I owe Jim Cramer a lot. I designed my entire investment strategy based off the diversification portfolio show he aired on Mad Money years ago. But I gotta take the other side of this argument and defend the younger investor who doesn't seem to have a voice in this conversation. When Cramer concludes that young investors don't understand traditional metrics and they only invest in what they see, it's slightly insulting. These young investors in Robinhood and YouTube and other places is a quickly growing community. And if CNBC does not become a little bit younger in their thinking, they're going to become irrelevant by the time this generation grows into midlife. I feel like these young investors could teach the mainstream investment crowd a few things if they'd listen. Hey, you old dogs out there, you all got to learn a couple of new tricks. Look, we like your metrics, but you have to be able to lift your eyes up from the balance sheet occasionally or you're going to miss the forest for the trees. Let me tell you where I'm coming from. I started investing in Tesla in 2013. Now, if not for the mainstream media, I would have invested in Tesla in 2010. But it took me a couple of years to figure out how incredibly wrong they were on Tesla stock. Hey, if you were kept out of Tesla or another stock that ended up being great, please leave that information down below. I'd love to hear about it. But the media was so incredibly wrong on Tesla for such a long time. I gotta ask, how many times do you have to be wrong before you start to question whether or not the one that's wrong is you? Or to quote Jim Cramer, when the facts change, you gotta change your mind. A large percentage of these young investors have been outperforming the experts in the mainstream media, and they've been doing it too long for it to just be luck. And when they are talking about youth, they are not only talking about the young investors, they're talking about Robinhood, they're talking about YouTube, they're talking about us. I feel like as a group, we have a pretty good idea about what's going on. Here's a list of just a few things that go beyond the balance sheet that we look at when thinking about Tesla stock. First of all, who the CEO is should matter a lot to the value of any stock. I mean, I do believe that a lot of experts out there think that just about any suit could run a company. Having a product that is so good that you don't have to advertise because the product sells itself. And when you try to imagine the electric vehicle industry in the future, well, there's only one company that is currently expanding their capacity on a global scale to be able to produce vehicles and batteries for everybody. And there is absolutely no company out there that has a rate of innovation anywhere close to that of Tesla's. So how is anybody else going to even catch up? Which brings me to the last point. The competition has failed miserably. There's not a single company out there that has produced an electric vehicle that compete with Tesla on price comparison and sales. Okay, so Tesla trading at $650 a share gets a $90 price target from JP Morgan. JP Morgan analyst Ryan Brinkman has told clients not to increase their holdings in Tesla to approximate its weight in the S&P 500 ahead of its inclusion to the benchmark on December 21st. Now, I'm not going to read this whole article. I'm just going to scroll down to a point here where it says, Brinkman says Tesla shares are, in our view, by virtually every conventional metric, not only overvalued, but dramatically so. So this is just another in a long line of examples. And I wonder how many stupid things do you have to say before you even begin to lose credibility in this business? Because where JP Morgan has been publishing hit pieces on Tesla for years, they have been exceptionally nice to Nikola Motors. I'm just going to give you one example. Recently, GM had a deal in the works with Nikola Motors where GM was going to make their Badger pickup truck for Nikola, and Nikola was going to give GM like a large percentage of the business. But then, next thing you know, Nikola is being sued by everybody for fraud and lies and all this stuff. And GM suddenly is like, whoa, wait a minute. Well, I don't think we want to be involved in Nikola at all. We want to completely back out of that deal and make a new deal. And the new deal is we want nothing to do with you, except we will actually sell you things like any other customer. But you'll never guess what happened next. When JP Morgan heard that GM wanted to back out on the deal with Nikola and refused to make the Badger pickup truck, JP Morgan didn't say, woe is me. No, they went, yes! This is fantastic news for the company, and Nikola stock is now a buy. Seriously, I'm not making this up. Look, it says right here, Nikola's 25% dive is a good buying opportunity because the company's decision to abandon the Badger pickup truck means that it can now focus more on the semi-truck. Can you imagine what would happen if Tesla canceled the Cybertruck? Do you think JP Morgan would come out saying, hey, this is fantastic because Tesla canceled the Cybertruck, they can now spend more time working on the Model Y? You can't make this stuff up. As I make this video, Tesla's market cap is over $600 billion. And though much of the media has been either rooting against or in complete disbelief of the Tesla story, there are a few out there who have been bullish on the Tesla story right from the beginning.
Tesla is one of the most maligned stocks in the stock market. And I'm one of the most trolled portfolio managers on Twitter in the world because of Tesla. But our conviction here is, it is our highest conviction stock. It is the largest position in our portfolios. We think the autonomous taxi opportunity is going to be even bigger. Many people think ride-hailing companies are going to be the autonomous taxi network providers. They are not. They haven't been collecting data. They haven't outfitted the cars with sensors to collect the data to train autonomous vehicles. Tesla has. That's our #1 pick.
Cathy Wood and ARK Invest currently have a 3-year price target on Tesla of $1,400. And I think that ARK Invest is the only firm that actually believes in the robotaxi network. If she is right, and I think she is, then Tesla stock is going to soar to the moon and beyond, well past this S&P 500 inclusion event. As I think back on all the troubles that Tesla has had in the past and the struggles that they had to endure, I think that this year has been a truly great year for Elon Musk.
Elon Musk passing Bill Gates to become the second richest person in the world with a fortune of over $128 billion. Now, never before has anyone become so wealthy so quickly. Just this year in 2020, Elon Musk has added $100 billion to his wealth. That works out to $13 million per hour for the entire year of 2020. Now, in the coming years, he could also benefit from this incredible pay package that was granted back in 2018. That could be valued at an additional $55 billion if Tesla meets certain market caps and hits certain performance strategies. Now, Tesla stock would have to reach about $900 for Elon Musk to get to the #1 slot.
And Elon is achieving all of his goals, every one, even if some are occasionally a little late. So let's talk about this week and what we can expect to happen. I've talked about this in several videos and I will leave some links right there. In my opinion, I think that it's likely that the stock will run up to as much as $700 by Friday. But after that, all bets are off. Tesla stock could run up to over $1,000 a share, or it could sell off and drop down below $500. And I think that there's a small but very real chance that the market could crash. So if you don't hold any shares of Tesla stock, I would encourage you to buy some by Friday. And if the stock falls below what you paid for it, well, buy some more. And if you are already a Tesla shareholder and you would like to try to sell a small portion of your position when Tesla peaks at, who knows, between $700 and $1,000, then by all means, you have my blessing for that too. So this is just my strategy, the way I invest. I am a long-term investor. So I would love to hear your thoughts on what you think is going to happen on this historic day. Please comment below. I almost did not have time to finish this video as I have decided to get my hip replaced. After some very careful thought, I have decided to go with a titanium one. So when this video launches, I am going to be in surgery. So you can wish me luck if you want to, just by hitting that like button. If you are still watching and would like to support my channel, it's really easy and it won't cost you a cent. All you have to do is subscribe, ring the bell so you don't miss any of my content, and make sure that you hit that like button. Because every time you hit a like button, an angel gets its wings. And until I see you again, remember, you don't have to make a lot of money at your job to become rich. Because when your money is making money, you can spend your money and keep it too.
Don't buy or sell a stock just because a YouTuber like JC says so. He's got opinions. These decisions are important. This is your money. These decisions should be made by you. And whatever you do, make sure that you monster smash that like button. Rawr, rawr.